Welcome back to Commodity Classic. This weekend, our live taping of U.S. Farm Report, a great crowd. We appreciate everyone for being here. Chip Flory, Chip Nellinger, Arlen Suderman joining us for the marketing discussion this weekend. But we want to start off because this is Friday morning that we're talking. There's a bit of breaking news from StoneX when it comes to an updated look at the South American crop. So, Arlen, how much smaller is this crop getting?
Well, we have 14 offices in Brazil, and so every month during the growing season, we survey our producers and say, what is the size of the crop? They've done a pretty good job of that over the years. And there's a tendency with farmer surveys that when it's a big crop to overshoot it and then come back down, when it's a small crop to undershoot it and come back up. So you always say, where's that inflection point going to be and everything? A production estimate for March 1st for soybeans is 151.6 million metric tons, which in and of itself is pretty close to where some other private estimates are, but that's up 1.2 million metric tons from last month, as they were hearing better than expected yields in the harvest from a couple of key production areas. That really kind of surprised me. All corn production at 124.5 million metric tons, essentially unchanged from last month. That's not really a surprise because the safrinha crop, which is 77% of production, is just completing planting now in Mato Grosso. So I expect more changes in that as we go forward. That's where the big risk is.
Chip Nellinger, this is like deja vu to the U.S. crop last fall. I mean, headed into it, we're walking during crop tours, seeing crops dying in the field the third week of August, and then here we are with harvest. And then in January, we have a record corn yield in the U.S. I mean, to hear these, I mean, this is phenomenal. Not for prices, but phenomenal to hear how this crop is done this year.
Yeah, much like our season, they were so hot and dry early on, and they got some late rains that I think benefited that crop. They're going to debate that crop size for a couple more months, though. It's going to take a while to figure that out. And I think the take-home I get here over the last 3 or 4 months, this market trades more on technicals and money flow than fundamentals right now. And so, the market sold off hard on some friendly fundamentals. Just because we're getting some bearish fundamentals maybe with some crop estimates doesn't mean that we're going to continue to break this market with the funds being record short right now.
Well, Chip, I mean, lately, Chip Flory, it's not like we've seen the South American market really move the markets much.
No, and the harvest is happening so fast that there's so much crop that needs to be covered, so much crop that needs to be hedged. It's hedged in the U.S. market. That's had to have an impact on it. And if anybody's still watching the supply side and trying to figure out exactly what's going on, to hear the phrase better than expected is like, rubbing salt in the wounds. We're to the point now on the supply side of the market that we're going to have to get into a harvest where we hear it's worse than expected to turn this thing around.
Well, on the demand side, we need good demand news. And there were rumors this week that China was buying corn out of the PNW. Arlen, is that happening?
They're buying a little corn, but they're mostly buying from Ukraine and buying from Brazil right now. Now, they are, when you look at where U.S. corn is priced, it's about 25 to 30 cents higher price than Brazil corn, but Brazil is starting to switch towards soybeans. So that's good news. But they are buying a lot of Ukraine corn. The key there is the Red Sea, because all that corn coming out of Ukraine goes through the Red Sea or all the way around the southern end of Africa. And so that increases the cost. It's ironic that China is buying that corn because they just had a bumper crop. And based on our private sources in China and our people there, we believe the crop in China was bigger than even the government says that it was. So why are they buying? Because they're building reserves of just about every essential commodity right now. Corn, soybeans, crude oil, they're building supplies. They are buying corn from their farmers, putting it in reserves to try to prop up the price. And in propping up the price, they're making it the arbitrage work for importing corn. So they're continuing to do that. They're buying grain sorghum for feed as well. They're buying up commodities, building up reserves.
Oh, building up reserves, buying sorghum, buying corn. I mean, that's good news for us, right, Chip?
It is in general. I mean, you want China to be there. There's other demand we have. That was the thing that maybe hit the bean market a little bit here when this recent sell-off was China has not been there to the extent that they had been in the past. And it wasn't that they weren't buying beans. They were buying record amounts of South American beans. So their appetite is as strong or stronger than it ever has been. It just right now, in the short run, has not been U.S. beans they've been buying. But to Arlen's point, they're still there in the market. The world supply and demand figures in the cash markets will sift this out, and it looks like we're closer than we have been, at least in the last 2 or 3 months, to being fair value in corn, beans, and wheat in the world market.
Yeah, so when they shift gears and start to accelerate their purchasing, you got to ask the question, why? Why are they doing it? So if they are accumulating all these commodities, the list that Arlen went through, what are they prepping for? Is Taiwan involved in this? It could be something that we're going to have to watch very closely.
All right, well, we need to take a quick break, and then we will have much more from our marketing discussion right here at Commodity Classic.